Welcome to week 2, episode 2 of the Trial by Fire Investment Competition podcast. Just a quick reminder, because we are being recorded here. I'm publishing these to the internet. So if you're watching this on the internet and you're not on the video call, this podcast is about us doing a fantasy football style competition, but for stocks. If you need more explanation than that, you need to go to episode 1. But what you need to know for full context here is that we're doing a 52-week long competition, and the loser of this competition has to walk across fire. Full disclosure, we don't know what we're doing, and we've agreed to see what we can learn through a trial by fire. Each of us have different levels of knowledge and understanding of stocks and trading, if any at all. This podcast is not investment advice. This podcast is for learning and to document our competition. Opinions are our own and do not represent the opinions of anyone's employer, past, present, or future. Again, we do not know what we are doing. With that, who is ready to review our week 1?
Oh boy.
Are we going to start with the loser or the winner?
Everyone's a winner if your name is not John.
What? No way.
If your name is not John, then you are not in last place. So you're all winners in your own way. Although the biggest winner, I know. The biggest winner is Faith with the Royal Caribbean Group. And David barely beat me out of last place by 20 cents. A total of 20 cents.
Hey, makes sense.
Yeah. So we talked about it offline and everything like that. We said the loser of a week is gonna have to do a shot. So I have some very appropriate Fireball here. I would like to point out that I believe I do not have a drinking problem.
That's what they all say.
Nobody's accused me of having a drinking problem.
Not publicly.
Not publicly. If you guys do have a drinking problem, I'm not gonna make you like say it out loud here. Just drink apple juice or some shit.
Gamble. Oh,
yeah.
Sorry, wrong number.
Yeah. In the description, I will put some type of hotline or helpline, website or phone number in the description here. But yeah, this is a nice shot of Fireball.
I brought some color to him.
Spicy.
All right. All right. Ooh, I'm getting a little flush in the face.
Forgot what he was gonna say.
You're always kind of flushed in the face.
Yeah.
This is a professional podcast.
Completely professional. So during this past week, I know you guys are all watching your own stocks. I have my fancy little tracker right here that I was kind of updating it and making sure everybody knew how everyone else was doing as well. It was touch and go there for a minute. I really thought Jacob was going to be in first place. And then Faith came out of nowhere. I pretty much had last place secured the entire time, except for like a brief 30-minute period where David really gave me a run for my money. But you know what? I really held on to that last place like a true Ford owner.
Accurate.
All right. Now it's week 2. I got all of your stock picks for week 2. Are you guys ready to see that?
Yeah. Let's do it.
I wonder who the first 2 picks are going to be.
Yeah, I wonder. So I chose my pick on Thursday. And here's my thought process on my particular pick. All right. I wanted to make sure that this kind of stays interesting. And
No
I thought, well,
way.
how do I make sure that this like stays interesting while still competitive and I get to win? And I'm like, well, you got to stay up with current events. And today's Friday. I don't know when this episode is going to be published, probably Monday or Tuesday, but Monday is Memorial Day. All right. So current events, Memorial Day. I was thinking about it. David, do you have any idea what veterans invest their money into?
Are you talking about
Besides Ford Mustangs and Dodge Chargers.
Speaking from experience,
John's like, I've wrecked them all.
All right, so I heard
Can I answer?
about this
Can I answer?
company. Yeah, go ahead, Jake.
So they invest in PTSD, alcohol, and nicotine.
and treatment for those.
Strippers.
Well, that's much later
They should
on.
go on to marry and divorce.
Yeah, nicotine, tobacco, alcohol, all good ones. I couldn't find good companies in those genres, so I really had to think outside this box.
I got one
And
sitting on my list.
I heard about RCI Hospitality, and I heard a story about it. I haven't verified the story. I just believe everything I hear on the internet. And the story goes is that this dude started this company as a teenager with money he inherited from his grandpa, selling his grandpa's like baseball collectible cards or something. He started a business. And then he started the business. It turned into a chain. And now he is the proud owner of a bunch of strip clubs. And he's like, wouldn't it be cool if you could invest in strippers on in the stocks? And that's what the RCI Hospitality or the RIC stock ticker symbol is. It's your ability to invest in strippers through the stock market. And I thought, no, the numbers look really good. All the P&E, I don't know what that means, but that was a positive number. The market cap, that was a big number. The trends are pretty steady right here at like $46. But then I thought about it. I threw some logic into it. I'm like, well, how much money would you throw into a strip club? Probably you don't walk into a strip club with less than $150. So I believe that this stock can get up to $150. And it does pay a
Oh, boy.
dividend. I don't know how frequently. It's not a super high number, but it is a positive number. So I like this compared to alcohol, tobacco, and the Dodge Chargers. So here I am. That's my pick for this week.
The dividend.
So every couple of months, something comes up positive.
Something,
Only thing
something
coming
like
up
that.
positive.
I think he's making an STI joke.
I think he
That's
is
what I
too.
just said.
The
Okay.
dividend money smells like cocaine.
I don't know. The whole thing smells kind of fishy to me.
All right. So I feel pretty proud of my pick. And we'll see how it goes.
You'd say this
Fried
stock
chicken
is really
finger.
glittering to you, huh?
Yeah. Yeah.
Yeah.
All right.
Yeah.
Jake, did you know that you still have your hand raised?
Oh, how do you put that down?
I think you clicked the same button.
Oh, there you go.
You got to click that. Yeah.
All right. All right. I don't have anything to add about what I chose, unless you guys have questions. I think Jake sent me his stock pick next. He can go ahead and share with us why he chose AT&T.
That was an easy choice.
What do you mean easy choice?
I think it's uncalled for.
Yeah.
Oh, hang on here. I have notes. Give me a second. Oh,
You gotta let them dial it in.
Dial it in, AT&T. I appreciate the puns.
So this week I am sticking with I want high yield dividend stocks or higher end yield dividend stocks for the long-term competition. Obviously, it hasn't hurt me in the early weeks yet because I didn't lose like John did this week.
Yeah.
So I'm just going to keep going with that. I went and I did a different Google search and I looked for ones that have consistent yield on dividends rather than just high yield, because the high yield can fluctuate depending on how the company's doing. But if you look at a stock over time, if it's consistently yielding the same percentage over a long period of time, it's a pretty secure, that'd be one of those things where you talk to your financial advisor and they'd be like, this is one that you're looking at steady growth and you're not worried about it being volatile or losing your money or, whatever. So that's the kind of search I was doing this time around. And I got a handful of different companies that would be potential investments. And it's funny because David picked one of the ones that were on that list this week. Verizon's another one of those historically decent giving dividend stocks. But if I remember correctly, they had a lower dividend rate. So that's also what played into my decision to pick AT&T because they had a higher dividend rate. So they were on the higher end of this list that I Googled. So some of the other competitors that I considered on this one were Verizon, 3M, and IBM. And I didn't write it down, but I remember when I was doing the research, one of the other stocks on the list just so happened to be a tobacco company. So it's kind of funny we were going along that line with John over here. But when I looked at their 5-year track, it seems like it's on a downward trend. And a lot of the news articles attached to it stating that, vaping is becoming way more popular and cannabis is now becoming legal, that tobacco is becoming more of a, fossil thing. It's an old person stuff. So it's not really going to give me a high yield moving forward. So
I guess you could say that 5-year trend for the tobacco company is going up in smokes.
is this episode just going to be mostly dad jokes?
That's not phony.
I mean, there's a bunch of dads that are jokes on this podcast.
I only see 3 dads on this podcast. Unless there's a 4th one that I don't know about.
David's
No.
the father of some dogs
cool.
and cats.
Oh, he's just daddy.
So the other thing that I noticed too, once I was choosing this one, is it's also based in Texas, which is exactly where the last stock pick that I chose was based as well. So I guess Texas is just really good at making decent companies.
Or they just like moving there.
Or that.
Yeah, I think they
Something
like
about taxes
moving
and
headquarters
whatever.
there.
Yeah.
The other strategy I was considering switching to, which I have to do a lot more research, is I looked into some of the penny stocks, the ones where you could get, 1,000 shares for my $100 kind of thing. But I feel uneasy about that unless I do extensive research on the company. And there's just so many out there that it would take a while to pin one down and do enough research on to feel confident buying it. So I'm not ruling that strategy out yet, but we have, 50 weeks left to go on this for me to make other decisions. So it's a route I might go. We'll see.
Nice.
Good to know.
They've been
All
around
right.
a while too, so that's pretty solid.
Yes, they have.
Yeah, so I mean, I saw that you picked AT&T, and I was gonna ask you if you looked into Verizon, but you already answered that. Because David sent me his choice and it was Verizon, and I knew right away that like someone was gonna get uncomfortable when we started talking about it. So my question is David, are you uncomfortable?
I'm not uncomfortable. I like the points that Jacob brought up. He said that while he was checking over the prices for AT&T, he saw that they had a higher dividend yield. And initially, that's what I wanted and I was looking for. I was like, you know what? It's not a bad idea to get those dividends rolling, especially this early. So that's what I was looking for. I probably did close to the same research that Jacob did. But what I came up with in mine is that AT&T fluctuates in their business. And you can kind of see it in their graph, how they go up and down, and it's not as consistent as Verizon. And I was willing to keep the steady path, the level. Their stock has been at this price for the last year, roughly between $30 and $35, and keep that consistent. Just use the word the dividend, that return in money, because it has been consistent for them for multiple quarters where they're seeing close to the same return quarter after quarter.
Okay. What about like overall like public sentiment? Do you feel like Verizon has any kind of advantage over AT&T?
Speaking on a public perspective, you know, everyone wants to go to
You're
mobile
really
line. It's
breaking up,
hard.
bud.
It's up to whichever gives you a better deal. Oh no.
Can you repeat that?
Yeah, yeah. And
Yeah,
as
David,
far
it
as
sounded like your audio was getting shot.
can you hear me now?
Yeah.
Okay.
Sounds like
As
it's
far
all
as like
important.
as far as phone companies go, a lot of people like Mint Mobile because it's got Ryan Reynolds. But the bigger companies, it's really just whatever the best deal is for the best service in your area. And that fluctuates to the holidays, to the what they're willing to give you.
All right. So did you look? So Jacob looked into Verizon and AT&T, and he chose AT&T. Did you just look into Verizon, or did you also look at AT&T?
I did look into Verizon, AT&T. There were a couple other companies that I didn't recognize off the bat. I was looking into the higher dividend yields and what those looked like and what companies would be best starting out with. So
Okay. So why didn't you choose AT&T? Because Jacob said that had a higher dividend.
he said it had a higher dividend, but if you're looking back in their like stock history, I saw more of an up and down trend where it's not consistent versus Verizon where it's more they're at where they're at. They don't go down and they don't go up. And to me, that was acceptable.
So you're not you weren't like focused on like skyrocketing stock. You're looking at a steady, steady, solid
Dividend,
stock. Yeah, with a decent dividend.
steady dividend yield. Yeah.
Okay. And Verizon just kind of reached out to you and not AT&T. That's what you're saying?
Yeah.
I wish I could show you a screenshot of what I'm looking at because I'm looking back all the way to the year 2000 right now at both AT&T and Verizon. And I don't know, Verizon looks a lot more wavy and AT&T looks a lot more steady, especially in the last 3 years. Verizon just took a huge dip in the middle of last year, and they just started to rebound in September of 23. So I don't know. We'll see. We'll see.
Maybe they got some room for growth then. That'll be good for Dave. If
I
they
was
keep
going to
bringing
say
it back.
that AT&T, when they opened up their stock, they had an all-time high. But after that, it was an immediate crash. And from there, it went up. It came back down. It went up for a little bit and it stayed up, but it's been slowly drifting back down. And I didn't think that was going to be the consistency that I was looking for.
I see. I see.
Okay. All right. I just saw that you guys had two companies that like were kind of in the same industry there. I like I didn't do research on the company, so I'm not gonna like lean one way or the other. But I will look into like maybe making sure that you guys are able to or know how to do like screen sharing in the future, like Jacob mentioned. So we'll see what we can do there. Or maybe I'll add in some like graphics so that I can kind of see what you guys are talking about when this is shared and posted and everything.
I would try to
All
share
right,
my screen, but it's just on my cell phone right now, so I'd be concerned about like, scrolling past the wrong thing.
Ew.
Yeah, I don't want to know what kind of notifications Faith is sending you.
Wait, do you guys know each other?
I'm coloring.
Okay.
Hi,
What a
coloring.
solid answer.
Yeah.
That's
Honestly.
nothing. Hi.
Awkward
All right,
silence.
Faith, what do you got for us?
You talking to me?
Yeah, Faith, what do you got
Oh.
for this week?
Well, I'm a little sad to see Mike's pick because I was between Supermicro and NVIDIA myself, and I planned on doing NVIDIA next week. So that sucks. But ultimately,
You still can do it next week. It just might be at a different price point.
yeah, I'm hopeful. I went between the two for a while. That's kind of why I was one of your last picks, because I was just waiting to see how each of them went over the last week. Ultimately, I went with Supermicro because right now they're at a lower point than they were a couple weeks ago. But I see AI being something that's still in the beginning stages. And it's been around for a while, but I feel like it still has a long way to go. So I think over the next year, longer, that stock investing in now, even though it's at a high price, high-ish price, that I can make my money plus quite a bit later on down the road. I see the same with NVIDIA, but NVIDIA is at its highest right now over the last year. It's at the highest point right now as it's been over the last year, towards Micro.
Super Mario.
Super Mario.
And
It's like a
Supermicro's
big money,
not at
huh?
its highest point, so I felt like I would have a good chance of getting that back by the end
At
of
a
the year.
lower
maybe
price
plus,
later.
at a higher price later, yeah.
Okay. All right. So I gotta ask you, Faith. You killed it last week. You took first place with your pick for the Royal Caribbean group.
Mm-hmm.
I've never heard of the Super Microcomputer company. I've never heard of it. And like the stock trades at over $800, if I'm reading that correctly.
Mm-hmm.
How are you finding these companies? How are you deciding on them?
Well,
How are you finding them?
I
You
found
don't
NVIDIA through a family friend who was telling me about them and strongly encouraged that I just invest in them. And part of the reason why I didn't for this podcast is because this podcast is supposed to be something that I learn from and gain knowledge from, and not just piggyback off of other people that have been doing it for a little bit. So I kind of took NVIDIA into my Google search and found some other companies that were similar and stuff, and just kind of went down a rabbit hole. And I found Supermicro Computer, and price points were pretty similar to NVIDIA, but I see it still having room to grow. So that's why I went with them as well.
Okay. So you were looking to NVIDIA because it was kind of a recommendation. You didn't want to do it directly without doing like your own research, and because you're trying to learn on your own, and you went down some kind of rabbit hole that led you to Super Microcomputer.
Yeah, AI in general, stocks that AI is help build and grow is where that rabbit hole kind of went, and I found Super Micro. I also liked it
Okay.
because it's Super Mario. But
So you're not a
Okay.
super big fan of AI, it sounds like, either.
huh?
So you're not a big fan of AI either.
I mean, I'm not opposed to it. I mean, don't really
You
have an
just don't think
opinion.
that it's adding value to where it could be compared to other competitor companies to like. So if NVIDIA is doing more AI work and Supermicro computers isn't, you're more inclined to go Supermicro rather than NVIDIA, right? Because they're more into the AI stuff.
Mm, I wouldn't say that in particular. I think Supermicro is heading in the direction that NVIDIA is, but NVIDIA has already hit a high point, and it could continue to grow. It could drop, and right now Micro is heading towards that high point, and I feel I have a higher chance of making more money off of this upcoming stock here, say, rather than a well-established, well-known stock.
Okay. Yeah, I don't know how, Jake, you got to the conclusion that like she's not into AI. I don't know what either of those two companies do with AI other than like build microchips. Um, so I like what did she say that you thought she's not super pro AI?
It sounded like she was leaning away from NVIDIA because they were doing more AI stuff. That's what it sounded like at first. That's why I was clarifying.
So, Super Micro
Okay.
Computer makes highly customizable servers, which are essential for maximizing the performance of the hardware within them, which fuels artificial intelligence.
So they're both like mostly hardware companies that
Yeah.
the AI needs in order to grow, to exist. I don't know. All right, Mike, that means you're kind of directly competing against Faith, and I didn't even realize it.
Yeah, pretty much. It's a competing company.
All right, so talk to us about your choice here.
Well, I was looking into the tech sector, and it kind of it drew me because it said that they were working very closely on a lot of AI software, and they're a major hardware producer with graphics cards and application programming interfaces. And I thought it's across the market. It's across. It's a huge industry, and they have a huge chunk of it. Billions of dollars are their assets. It really is a ginormous company, and that really drew me in, especially with how hot AI is coming up, and I thought that this is a company to invest in. My own personal feelings. So I mean, look at how many people use AI now, and it's only growing. And the fact that they do supply computer chips to everything from automotive to gaming, and who doesn't love gaming?
Who's
Okay.
got time for gaming?
Yeah.
Some
Everybody.
jobs.
Everybody. If I could build an app, it'd be a gaming app, and people would play it on their phones because they play everything else on their phones.
I mean, in theory, you could build an app that does that.
Right. In theory.
You
And then
got-
you could go
you got-
public, and we could be talking about you on the podcast.
To talk about who?
I said, and then you could go public, and we could talk about you on the podcast.
Right. Hey, you guys want to buy some stock?
No self-promoting.
we
Hey, we're allowed to self-promote, remember?
You got to have
No.
something to promote, though.
Yeah.
I don't think you have anything to promote right now.
No, nothing.
Nothing yet. All right.
Nothing. No strippers. Nothing.
All right.
John says go see Rick.
I think my audio is cutting out here a little bit. I missed what you said.
I said John says go see Rick.
Hell yeah. Nothing better than some hookers and AI, you know?
But no, they are a little bit on the high side, but they do have room to grow according to the market. You know, another $300. You know, they're actually up 262% from like a year ago. So,
But
you know, the fact that it's
weren't
still moving up.
wasn't Nvidia like awarded some type of like government contract, and then that's
I actually
why
didn't-
their
I didn't
price
see
share
that.
jumped so much?
No, I didn't see that. I didn't see that. I did see that they had a stock split. So
Okay. So I'm gonna make a bunch of shit up because I haven't researched Nvidia recently, but I have seen Nvidia in the news, and if I recall, something politics, worried about like Taiwan and China and where our microchips come from, and Nvidia has like existed for a while, being a U.S. based company. And then they realize, you know, what kind of threat it is not having our own production of microchips here domestically. And so the Congress or government passed some type of like law or bill or something that really incentivized U.S. companies to build microchips. And NVIDIA, like having already existed and was already in the space, like just dominated because they were already there. And then that's kind of like how they, I don't know, I almost blue chip status, whatever that means.
yeah, I didn't see anything about them with the government.
So one of the latest things that NVIDIA has done that I'm seeing is they're jumping into the autonomous driving market.
Oh, nice. Swerve, guys, swerve.
Their Drive PX is the platform, or the self-driving platform that they're trying to get widespread adoption for. So
Big
Okay.
Tesla.
yeah, historically they were mostly gaming and PC, and then more they kind of grew with the cryptocurrency because you needed a higher end PC to mine cryptocurrency. So they got a bunch of increase from that, and then now they're jumping into the autonomous driving market. So they're really branching out into a few different areas here.
Okay.
Yeah, like I said, they, you know, I knew about the automotive industry. I knew about the gaming industry. I just came across an interesting thing in 2023. NVIDIA became the seventh public U.S. company to be valued at over 1 trillion. As of March 2024, it was the third most valuable publicly traded company based in the United States and in the world, after Microsoft, Apple, with market capitalization of 2.3 trillion. So yeah, it's not small, and hopefully they'll keep up the good work.
I hope they crash. So I quit.
I hope you mean the
Crash.
stock price and not their autonomous vehicles.
Yeah.
I don't think the autonomous
Although I
vehicles
think
are-
if their autonomous vehicles crashed, I think their stock price would too, you know?
Probably.
Well, hopefully they don't
John
sell
might
forth
be
the
the
same
one
chip.
causing the crash, though.
All right. Hey now. Just
Hopefully they don't-
because I've been in over 6 car accidents does not mean.
Right, you're gonna
I mean,
be
most of them are
crashing
Fords.
the
So
vehicle with your stripper while on your phone from AT&T and Verizon.
Excuse me, I'm married. I don't hang out with strippers.
No,
Yeah,
you
he's
just fund them through stocks.
He's not in the
I
I
just-
just
military
need to
anymore.
hang out with strippers. You can't be that high and mighty.
Okay, so like if we're talking about strippers again, have you guys heard about like the stripper index, the stripper thermometer, whatever?
No.
No.
Okay, so apparently there's talk on, you know, the internet, which I totally believe everything I've ever read on, where there's like forums and stuff on Reddit that talk about like, hey, if you want to know how the economy is really doing, you can go talk to strippers, and strippers know exactly which direction the economy is going in, because like when the economy is good, they get paid. Everyone has money to like go to the strip club. But when the economy is turning for the worse, the first thing that people cut back on, allegedly, is going to the strip club. Um, I'm not saying I do or do not have friends that would cut back on going to the strip club. You know, I just I don't know. Apparently, it's the stripper index can tell you how the economy is going to do.
So hey, if there's another pandemic, John's gonna
Right.
take his money. John's gonna take his money out of Rick and put it in Pornhub.
Okay, all right. Since we're talking about that too, again, I was looking at like what are some things that like veterans invest in. OnlyFans is not a publicly traded company yet,
Yeah.
so um,
I also looked into,
what?
I also looked into that.
Like how to start an OnlyFans or like how to invest in
No,
them?
the stock. God.
So
If you're
but
trying
yeah.
to fund your
OnlyFans
friends,
now.
that's not
Okay,
that
Faith,
abnormal.
remember, no self-promoting.
So that's Feet Finder.
Oh my God.
Oh, all right. All right.
Well, once again, we push limits here.
Yeah. The questions that we had last week. So the first one that the first question that we had last week is like, did you guys want to know like what is a dividend, or did you want to hear about the stock ticker lengths and everything like that?
Stock ticker.
I did minimal research on that as well, so I'll be curious to see what you found.
Ooh.
On which one, dividends or stock tickers?
Yes.
All right. So I don't know if you guys know this. I'm a slut for AI. Talking about like how it's growing and everything like that. So where I did my research is I just went to Chat GPT and I just asked Chat GPT. So the stock ticker length, the conversation I had with that little AI, is it boils down to like three different factors. The first one is like overall how long the company has existed and how much trust is in the company. So if you're like Ford or something like that that has existed for, you know, almost 100 years or something, obviously their stock ticker length is going to be like shorter because there wasn't a whole bunch of competition for single letter stocks. Okay, it's one factor, not the only factor. Okay, the other one is laws and regulations. I could not figure out what laws and regulations it was referring to, but apparently laws and regulations may play a factor in how long stock ticker length is. And then the major factor, according to ChatGPT in my conversation with it, on the stock ticker length has to do with the different, and I'm gonna mess up the terminology here, the different indexes. So stocks are listed on indexes. So for example, the NASDAQ is a stock index that stocks can be listed on. And the NASDAQ requires that if a stock is listed on its index, that it has to have a minimum of 4 letters for its stock ticker. So according to my conversation with ChatGPT, Ford is not listed on the NASDAQ exchange. NASDAQ. I might be using the terms interchangeably. I didn't spend enough time on this. It's either exchange or index. All right. So it's not on the NASDAQ, but Ford is on the New York Stock Exchange. The NYSE, the NSE, or something like that. And then trading platforms that we're kind of like using to like do this podcast and things like that have multiple exchanges or indexes on their platform. So it like doesn't make a difference to us, but that's why these stocks have different like lengths and tickers, because they don't want their these individual exchanges or indexes don't want there to be confusion about which stocks are which. So those are the three factors that I got according to ChatGPT, and I'm not going to argue with AI. I'm not that educated. Did you guys get anything else? Or Jake, you said you did some light research.
Yeah, so I just have a few small points here. It builds off what you said a little bit. So when a company goes public, they get the option to choose their own ticker symbol. If what they want is already taken on that exchange, then they need to figure out a new one, or the exchange will assign one to them. Okay. And like what you said, so obviously with Ford, with them being so old and probably getting on the exchange a lot earlier, or maybe being one of the first companies out there, obviously, who's going to compete for the letter F, right? So the New York Stock Exchange, they have a 4 or less allowed characters or letters in their ticker symbols when you're on the New York Stock Exchange. And the NASDAQ, you can have up to 5 letters in your ticker symbol. So depending on which exchange you're going public on determines how many letters you could have. So obviously, if you're going public on the New York Stock Exchange, you can have a max of 4. But if you're going to the NASDAQ, you have a max of 5.
Interesting.
Yeah. So this rabbit hole was leading me. I need to like figure out what the difference is between indexes and exchange. And then I'm kind of curious. I'm assuming there's more than just the NASDAQ and the New York Stock Exchange. I'm assuming there's more than just 2. So I'm kind of curious on how many there are.
Sounds like another question for next week.
Yeah. And then what the other question that we had was about dividends.
Yeah, what are dividends?
Okay. So again, my go-to better than Google is ChatGPT. And dividends are payments made by a corporation, usually in the form of cash or additional shares. And then they represent earnings and are typically distributed on a regular basis, such as quarterly or annually. There are different types of dividends: cash dividends, which are the most common, stock dividends, something called DRIPs, which is a dividend reinvestment plan, which allows shareholders to automatically reinvest their cash dividends to purchase additional shares. So it sounds like buying stocks with extra steps or with more confusing terminology. And then there's special dividends. And then companies pay dividends to reward shareholders and as a signal of financial health. And there might be some tax benefits depending on like where you live. But I didn't get a lot of like detail on that or anything like that. And then my conversation with ChatGPT led into like how dividends work and how they're paid and why there's like 4 different dates with that. But it was getting weird. Oh, and again, confirmed with ChatGPT, yes, unprofitable companies can pay dividends. It's not common, but unprofitable companies can pay dividends from something called reserve funds or borrowed funds. So I think I can kind of guess what those 2 things are. Borrowing sounds like debt. So they take out a loan, and then reserve fund sounds like maybe they had a savings account and then they pay it for there. It's not super common, but like unprofitable companies would do it based off of internal company policy. If the company focuses on cash flow versus profit, for other strategic reasons, to avoid like financial strain and to prove sustainability or something like that. So not super common, but it can happen.
Interesting.
Yes.
I
So
do believe
dividend-
one qualifier that businesses have to have is, so you said cash flow. They have to have earnings to be able to pay out dividends. If a company is no longer actually collecting any sort of revenue, I don't believe they can pay out any dividends. Now, if they're collecting revenue but their expenses are higher than the revenue they collected, then yeah, they're not profitable at that point, but they still have earnings, and dividends can still be paid out based on like what you said with the reserve funds, and or if they have a line of credit or
Borrowed
something
funds.
that they can borrow. Yes, exactly.
Yeah. Okay. That's interesting.
Nice.
Just to comment on your Chat GPT sluttiness, I would definitely press Chat GPT to make sure it's giving you accurate information. So like when it gives you an answer, make it explain either how it got the answer or where it got the answer from, and just try to press and try to make sure that you're getting the right information. Because so coming from personal experience, I got lazy, and I decided I was going to ask ChatGPT, hey, I have this return that has a fiscal year end, of this date. What's the due date for the tax return? Because different types of returns have different rules on when that due date would be. If you're looking at, like an estate return, if you're looking at individual return, there's certain months after the year end that you have to file the return. And so I asked ChatGPT, I'm like, hey, what's the date that I need to file this by? And it gave me a date, and I'm like, that doesn't seem right. Why that can't be, that's 6 months. That's not right. And so I had to go dig in my book. I'm like, no, it's supposed to be the 15th day of the 4th month. So I went back and I'm like, no, ChatGPT, you're wrong. And it had to apologize and tell me that it got the wrong information. So just be very careful when you're using ChatGPT. It's not always accurate.
Right. No, I get that. But one, I would like to point out that I believe everything I read on the internet. Okay. And two, a Chat GPT, I don't know if it's improving. It's on version like 4.0 now. Or at least that's what I have available to me for free. But at the bottom of all of my conversations, there is a disclaimer that literally says Chat GPT can make mistakes. Check important info. There's literally a disclaimer. So I know it's totally possible. And I should be pressing it harder on for like sources. But I've also seen some social media posts where it's like if you press Chat GPT for a source, the information can be correct, but it will not source material. It will make up a source that does not exist. But that was definitely for like previous versions and updates of ChatGPT, but it would like it's not something that it historically has been good at.
You guys keep talking negatively about AI, and I feel like my stock prices are going to go down.
No. Okay, I'm not talking negatively about AI. I'm not talking negatively about AI. I would like to point out I am going to be working on a book here where not ChatGPT, but AI is not the villain and does not destroy the world, and I am on AI side. Please don't kill me in the future.
It heard you like your parents
friend.
that didn't care.
You're a huge fan of Arnold, John?
Arnold?
The Terminator
Huge,
movies.
yeah, huge fan of Skynet. Definitely not the bad guy, you know.
They weren't wrong.
What's that Will Smith movie? Vicky. Vicky was right. Okay.
Oh, really?
Ah,
Robot. Vicky.
iRobot.
Jacob's looking confused.
Oh,
iRobot.
iRobot? Okay.
Yeah.
Yeah.
I'm
Yep.
actually we're watching The Matrix right now. It's on Netflix, and we're going through all of the movies. And yeah, no, AI is just using us. We just don't know it yet.
All right, guys. I appreciate your time tonight. If you guys have any additional feedback for me, please let me know on things that you would like to see improved or anything like that. Outside of that, I'm going to take a quick second and explain that I've started a competition with some of the members of my family. The general concept for this competition can be explained as fantasy football for stocks, where we simulate buying $100 worth of a chosen stock and discuss it as though there is no intention of selling it within a 365-day period for the purposes of this podcast and for tracking and scoring, regardless of actual trading activities. Each week, we will pick a new stock and add it to our respective portfolios. And then the participant with the lowest overall performance and weakest portfolio at the end of the 52-week long competition agrees to walk through fire on top of hot coals, provided I can figure out how to do it in a safe environment. Full disclosure, we don't know what we're doing, and we've agreed to see what we can learn through a trial by fire. Each of us have different levels of knowledge and understanding of stocks and trading, if any at all. This podcast is not investment advice. This podcast is for learning and to document our competition. Opinions are our own and do not represent the opinions of anyone's employer, past, present, or future. Again, we do not know what we are doing, especially me. I am not a professional trader, video editor, or social media manager. So if you have tips or tricks, please share it. If you enjoyed this episode or plan on watching more than one episode, I am asking that you invest in us. Not with money. I'm asking you to invest in us by hitting that like, follow, and share. And despite reading somewhere that you should never read the comment section, I plan to read every comment for this video on YouTube.